predict. Okay, so predict is we've identified the trending market. This is a trending strategy. What we're going to use for the predict is something called exponential moving averages. Who's heard of these? Okay, everyone's heard of exponential moving averages. If you haven't, don't worry. There's lots and lots of different moving averages. There's simple moving averages, weighted moving averages, exponential moving averages. What we're going to do is use the exponential. It's a bit of a mouthful. Okay, we'll call it EMA. But an exponential moving average is just a little bit faster to react. Okay, because they're lagging indicators anyway. So we want the fastest reaction, and this particular strategy needs a faster reaction. And what they actually are, does anyone know what the moving averages are? They're just a moving average. That we can just call it moving average if you like. All they are is the average price movement over a set period of time. So we're using free for this. Why might we be using free? Why might we be using free instead of just one? Confirmation, filters, yep. Tells a bigger story. Confluence, not going to be looking at crossovers, no. There's no crossovers. This is a trend strategy. Even out, line. Yeah, all of those are right. Okay, most of those answers are right. Because it's a filter, we want confirmation that we're in a high probability trade. Now, what we're going to be using, write this down, the 50, the 20, and the 8. The 50 is going to be in blue. The 20 is going to be pink. And the 8 is going to be yellow. And I've chose those colors because that's what they are all over my charts. And why do we use these? Well, 50 EMA, if you know, ask any trader and they've heard of the 50 EMA. It's a very, very powerful level in the market. Institutional traders use the 50 EMA as well as the 200. It's just a very, very well respected moving average. The 20-50 zone, again, signifies a very, very powerful indication of a reversal back to continuation. And then the 8 and the 20, so we're using the 8 and the 20 because it's just a shorter term momentum that we're looking for here. Okay. So don't worry if this is going a little bit too far, but we're identifying trending markets. We're predicting that they're going to continue trending using these exponential moving averages. And the way we're going to do that is very, very clear. First of all, write this down. If we're looking for a bullish trend, the price must be above the 8. The 8 must be above the 20. And the 20 must be above the 50. Yes, it's on closing price, yep. Okay, so the EMA is set to closing price. So if we're looking for a bullish trend, price must be above the exponential moving averages. It must be above the 8. The 8 must be above the 20. The 20 must be above the 50. Now, price will dip down into these, but as long as the EMAs are in this order, 8, 20, 50, we're good to go. And that's how we predict that we're likely to continue. Okay, you can see these exponential moving averages fanning out. It's quite a nice drawing I did there. I did that freehand. But they're fanning out, and that means that we're gaining momentum here. Okay, now if we're looking for a bearish trend, what we're looking for is the opposite. So price to be below the fanned out moving averages, and the 50 must be above the 20, and the 20 must be above the 8, and then price is underneath the exponential moving averages. Now, as I said before, the price can push into these, fine, as long as these remain in the same order. Okay, the price will be trending underneath these. It might dip into them, but it'll be underneath them overall. Is everyone with me so far? It's going to be so simple because I'm going to give you so many examples. It's going to blow your mind. And I'm not even going to scroll back charts. I'm just going to look at like this, the latest charts to show you examples here. Like literally this is the daily time frame. So everything you'll see on my screen is probably the last 3 months. And I'm going to give you a lot of examples. All right, so we're predicting a continuation based on what's happening with these exponential moving averages. Now, there's a caveat there. If we cross over like this and we don't have the order, okay, so here's a question for you. This is a bullish example. What order must the EMAs be in? From top to bottom. 8, 20, 50, 8, 20, 50, 8, 20, 50. Yep. 100%. 100% success rate. Look at that. By the way, I passed my motorbike theory test this morning, so, you know, you're not the only one passing tests around here. So yeah, we got the, you've got it right. So if this crosses and we no longer have that order right here, come on, pen, do we still predict or not? Do we still predict a continuation? No. What do we predict? We predict a hold. We're just going to hold that. I'm predicting that, you know, I've identified we're in a trend, but my prediction is we're not going to continue a trend at the moment. I want to hold my horses, as I say. I want to hold my horses. Okay, until I know that we're likely to continue again and these have sorted themselves out. Okay, so that brings us on to the decide part. I'm just going to grab a bit of water. I get so excited when I do these. So we're going on to the decide part. Now, what is the decide part? Does anyone remember? What's the decide part? What is it made up of? What does it mean? What do we do? No, the signals is the yes, the signals. Sorry. Yes, the signals. Just dropped my water. The signals, yeah, the setups. Okay, so we've got to get the confirmation. So how do we decide to get involved? Well, we know that we're in a trend. We've predicted that it's going to continue. Okay. Now we've got to decide how we get involved. Now this is going to be very, very simple. You're going to need to write it down though. Because is there going to be one or two different types of signal here? We could be bearish or we could be bullish, right? There could be two. So you need to bear this in mind, right? So I'm going to go through this in clear detail. I'm not going to move on until you understood this. We are looking for what we call a pin bar. Okay, now the pin bar, it doesn't have to look like a pin. It can be red or it can be green. If we're bearish, and this is a bearish example only, these ones. Okay, the rules are that it has to, the body of the candle has to be, the open and the close have to be in the lower 50% of the candle, okay, and the open or the close has to be in the lower 30% of the candle. All right, has everyone got that? So the candle on a bearish trend, because we're looking for the pullback, the candle has to have an open and a close. Does everyone know what the open and the close is? This is the open, this is the close, this is the open, this is the close. Okay? Has to have an open and a close in the lower 50%. Okay? Make sense? Does that bit make sense? Has to have an open and a close in the lower 50%. So anywhere between this line and this line. But has to have an open or a close in the 30% as well. Alright, so if this candle looked like this, would this be valid? Even though it's in the lower 50? No. See what I did there? Does everyone understand this? Don't worry if you don't understand it. I'll repeat it and repeat it and repeat it, and I'll do the opposite side as well. So when this is a bearish signal only. Okay, so just to show you what that looks like, we're looking for the trend and we're looking for this signal right here. Okay, now once we get up here, we're looking for a candle that looks like this or looks like this. It can be a red candle or a green candle, a bullish candle or a bearish candle, but they're both considered bearish because why? Because the open and the close is in the lower 50% and the open or the close is in the lower 30%. You must have those two. Okay, it's an and rule. And rule. Everyone knows if then thought syntax, and or, if then. And is a non-negotiable. It has to be this and it has to be this. So in this instance, it has to have an open and a close in the lower 50%, below this line here, and it has to have an open or a close in the lower 30%. I'm just going to clear those lines off because it's getting a little bit hectic around here. Yeah, there isn't a why. You don't ask why. This is these are the rules, okay? As soon as you start asking why, and I'm going to give you these rules into the plan at the end, and I'm going to tell you that if you try to start breaking it, tweaking it, you know, good luck to you. Let me go through it one more time, and then I'll do the opposite. So when we're looking at a bearish trend, and we've predicted that we're likely to continue down based on the moving averages, when we get to this point here, we're looking for a bearish candle, okay, daily time frame only, and we define a bearish candle. I told you it was going to get in depth today, didn't I? We define a bearish candle looking like this or looking like this, and it doesn't have to look exactly like this because the rules are the open and the close, right, have to be in this zone. But as well as that, the open or the close has to be in this zone. Now, do you understand? Does everyone understand? Don't say what I don't understand is why, because that's not allowed. Okay, let me just give you another example in the opposite direction. So let's just say the trend is like this now, right? We're going to be looking for the entry. The decide part's going to be around this zone here. Okay, and funnily enough, it's the opposite. Right, we're looking, what would be the rules for a bullish signal candle? The open and the close must be in the top 50% of the candle, as well as the open or the close has to be in the upper 30% of the candle. There you go, Greg. Greg's got it, upper 50 and 30. Okay, so it can't be 50 or 30. Has to be open and close in the upper 50. Check. Open or close, lower 30. So this candle could actually look like this. Right, I can't color all this in, but this could be the candle here. Look at that, terrible. Terrible. Okay, got it. Got it. So it doesn't have to look identical. The rules are open and close in the upper 50, open or close in the upper 30. That's it. Measure your candle. Now, how you want to measure the 30%? You can use Fibonacci. Set one of your Fibonacci to 33.3, and that will be the upper 30%. Okay, you can use a Fibonacci tool. You can measure on price and divide it by 3. It really is lots of different ways you can do it. Fibonacci gives you a quick little hack. All right, does this make sense so far? And is everyone kind of cool to roll over the break a little bit? And we'll take a break later because I just want to get through all the rules, and then we can look at an example, and then we can look at some live charts. Yeah? Okay, I don't want to stop now. We've got momentum and people are kind of getting stressed. I can hear them. I can hear them snapping pencils, kicking their cat. Would you like a coffee, dear? No, I don't want a bloody coffee. Come on, let's keep it light. Keep it light. Okay. So does everyone understand this? Say no, I'll go through it one more time. I'll go through it one more time. Right. Bearish candles. I want you to get this. I really, 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 really want you to get this. Bearish trend. We are looking at a bearish trend that goes like this. We've identified a bearish trend. We're predicting continuation because the moving averages are fanning out and the 50's above the 20 and the 20 above the 8. We're then deciding how to get involved by looking at a signal right here. So far, everything I've said on that point, does that make sense? Good. S. Does that mean sort of? Okay. So we go to the decide part, and what we're looking for is a particular candlestick formation. And the particular candlestick formation looks like, in a bearish trend, this. And the rules are the open of the candle, which you should know what the open of the candle is by now, and the close of the candle, which are these 2 points here, open, close, must be in the lower 50% of the whole candle. And it can be red or it can be green. Correct. The second rule is the open or the close must be in the what? The lower 30%. Okay? Open and close in 50 plus open or close in 30. That is the best way to say it. Open and close in 50 plus open or close in 30. Got it. Light bulb. Psst, penny drop. Ching. Okay, I'm going to show you that. It's all going to be put together well. Execution, right? So, bullish candles, exactly the same. We're looking for bullish trend. We've predicted a continuation based on the moving averages fanning out. We're looking for the decide part here. We're then using particular candlestick formations to get those decide parts. And again, it's the opposite. Red or green, doesn't matter. Say it with me. Open and close in what? 50%, upper 50% this time. Open or close in what? Upper 30. And you need both of those rules to be met. Hooray. I think everyone's got that now. I think everyone's got it. If you haven't, watch this recording over and over and over and over and over again. Okay. So just as an example of when you said when would you look for this, I'm going to go over that right now. Okay. We're looking for what are these? Are these bullish or bearish candle signals? Bullish or bearish candle signals? Bullish. They're all bullish. Even though they're green or they're red, they're all bullish. Does that make sense to everyone? They're green and they're red, but they're all bullish. Because they all meet the rules of the bullish setups. Make sense? Good. What are these? Are these all bullish setups? Yes, 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 yes. Okay. Right. Now, bearish. Are these all bearish even though they're green and red? Are these bearish setups? Are these bearish setups? Just to show you kind of where we're going to start looking for them. Now there's more to decide to go through now. So you got to make notes on this, okay? Because a lot of you are going to be querying this, right? So let's just go to the left-hand side here. Everyone see the screen? Let's just go to the left-hand side here for now. And we're going to do bearish. The rules are, as we're approaching, okay, the bearish signal must touch it or be above it. The 8 EMA. The bearish signal candle must touch or be above the 8 EMA. Now we're not talking about crosses or anything like that because the EMA shouldn't have crossed. We're not looking at those opportunities. We're looking at when they're not crossed. So when we push up, all we're looking for is a touch or above. So this first one, is this valid or not? I'm going to say yes, because we've touched the yellow EMA. Is this one valid or not? Is this touching or above it? It's touching. Right, this is valid. Is this one valid? Look how many people say no. Yes, it is valid. This is a bearish setup. The rules here, look, touch or above. Touch or above. Touch or above. Come on. Right? This is why. Can you see, right? I've laid this out so simple and so clear. Can you see how people still mess these strategies up? This is why you have to practice it. This is why you have to test it. This is why you have to go and practice and practice and practice and go out and do demo examples and historic examples. Because if you just think you know this, you don't. And this is an exact example of when people rush ahead and they think it's gone in and it hasn't. I told you I wasn't going to be very, there's no fluff here. I want you to be profitable. And there's no reason why you shouldn't be. You just got to do what we're saying and listen. All right. Is this one valid? If you say yes, I'm going to... Good. Right. Is everyone getting value from this so far? Good. Inverted hammer. Look, I don't care what the names are. We don't care what the names are because we've got rules that make them what they are. So it doesn't matter what the name is. A name is, unless you've got objective rules for a name for a candle, which most people don't, then, you could say this is a doji, okay, but how far can it move in price before you don't consider it a doji? So I don't really care too much for names. What I care about is rules, because there's no movement on rules. Rules are rules, and that's what we're going for. Rules, rules. All right, let's just scribble these off, and let's do the other example. We'll take a break in a sec. So we're now looking at a bullish trend, and don't get confused by the shape of this. This is actually a bullish trend, okay? Because remember, we're pulling back down and we're looking for the entry. All right, so don't get confused there. This is a bullish trend. We've pulled back down to the EMA, the 8 EMA. Is this one valid? Yeah, I want 100% here, right? Is this one valid? So it's the opposite. Touch or, this should say below. Whoops. There's a big boo-boo. Okay, is this one valid? Is this one valid? Yes! This one is invalid and this one's invalid. Okay, you have to set my deep apologies there. That should say below. Look at these mad skills. Joined up and everything. Alright. So it's the opposite. Alright. Now when I do the edit for this video, I'll put in a little below there so you don't get confused. It is what happens when you copy and paste, you're correct. Okay, so then we've got the execute. Alright, now I'm going to go through the execute rules and then we're going to take a quick break and then we're going to come back and we're going to give you some examples and we're going to go through step by step on a load of examples. Then we could also take a look live in the markets as well. Does that sound good? But is everyone with it? No one's fallen asleep. We've got a lot of people in here today. Okay. So the execution rules. What is the execution? What does that mean? Getting in, placing order, pulling trigger. Press the goddamn button. Yeah. Trade execution, right? So, can everyone see this lovely little chart here? Okay. Now here's where it's going to get really, really fun. Alright, so we're going to start, we'll start up here. We'll start top left. We'll work our way down. And remember, we don't really care about the pullbacks now. We're looking at the 8 EMA because we're already trending. We've got the fanned out EMAs. So what are we looking at with the EMAs? 8 below the 20, 20 below the 50, 8, 20, 50. We're looking at a bearish example here. So when we're looking in terms of bearish signals, what does the open and the close need to be on the candle? Open and the close in what 50? Upper or lower? Lower 50. And where does the open or the close have to be? As well as lower 30. Yes! Okay, so we're going to start top left. And this is the pound dollar, and this is a very, very recent, this is the most recent chart. Okay, so you can go and check the pound dollar. I just printed, I didn't scroll through loads of charts because there's tons of examples. But we're looking at this right here where we've pulled back up. Okay. And I'm going to start on this one, and I'll explain why I'm starting on this one and not this one in just a sec. Okay, so we have pulled back up to the 8 EMA. Have we touched it? Correct. We've touched it. Is that valid if it touches it? What can't it be in terms of the EMA? Below it. No, below it. Don't be sorry. I'm only kidding. I'm only kidding. It can't be below it. It can touch it or be above it. Okay? Now, I'm going to talk to you about the previous candle in a sec. What must the open and the close be? Now, I can't measure these out because this isn't a real chart, so I haven't got my Fibonacci tools or anything like that. But we're gonna just go with the eyes on this one. It must be in the lower 50%. Now, where must the open and the close? So let's just say this is the 50% here of the candle. I think that's fair. So we're under that. Where must the open or the close be? Lower 30. Well, I can tell you that the open of this candle was probably in the lower 5%, right? So Is this a valid setup? Correct. So we're going to execute now. What the rules are, now you want to grab a pen, this is going to be very, very simple. We're going, as soon as this candle is closed, we're going to wait for this candle to close. Bearing in mind this is the daily time frame. This takes me about 10 minutes, 15 minutes per night. I trade it on the markets that I've showed you. I've never taught anyone this publicly. The way that I place the order is 1 pip below the low of that signal candle. Okay. Now you can allow for spread. It depends what type of charts you got. Okay. Depending if you've got sell charts, depending on how the data's on your platform, you may only have to account for the spread on bullish examples. It depends how your charts are set up. You might just allow for spread all the time. Okay. But I'm going to go for an example of 1 pip just for all suits all. Okay. So as soon as this is completed and closed, we're placing a... Does anyone know what type of order this might be down here? A sell stop order, correct. G-Man. A sell stop order, okay? This isn't an at market order, this is a sell stop order where you're telling your broker that you want to get in at a price lower than what's currently trading. And the broker will trigger you into that. And you do that by placing a sell stop order. Now, your stop loss will go 1 or 2 pips, depending on what if you're going to front run, okay? If you're going to allow for spread, we're going to say 1 pip above the high of that candle. And you're going to calculate a target position based on 1% risk of your account. Okay, and we're going for a 1-to-1. We're going for a 1-to-1 target. Now, the reason we go for 1-to-1 is because it's quite a high strike rate. All right, so it's okay to just keep hitting these off, getting the 1-to-1s, getting the 1-to-1s, getting the 1-to-1s. We just want to be in, out, in, out, in, out, in, out. There's lots of opportunity and a high strike rate. Okay, now, the order stays on for a day. Okay, so if this next day doesn't trigger it, you close. You close the order out. Which is why this one next to it, I didn't start on that one, because if we started on that one, we would place the order, it would push up actually, beyond where our stop would be, and the order would be invalid. Does that make sense? Once that closed and we didn't get triggered, then the orders, you just close it off. And, you could set your sell stop order. You could do like an automatic close. You could set that up on your charting platform. Or if you're at your charts every day, which I prefer to be, is just do it manually. Okay. So, is everyone okay with that at the moment? Everyone okay? Do the calculate bit again. Okay. Right. So, order goes. Once we've seen the signal, we put in the sell stop order 1 pip below the low of the signal candle. Okay. Depending on what your platform allows you to do, you may be able to set a stop loss order, or you may have to do that manually once you're triggered in. Okay, but once you're triggered into the trade, your target is going a 1-to-1 move of the risk. And the risk is going to be calculated. The reason I'm doing 1% on this is because there's lots of different money management strategies, and this is going to be very, very easy for everyone to follow, and I'm going to give you the example based on 1%. So you calculate how many pips this is. Your position size is based on how many pips that is relative to your account size, and you want to be 1%. 1% risk, 1% gain. Make sense? 1% risk, 1% gain. We're not going to go into how to calculate your position size and all that just yet. But it's a 1%, 1%. Not clear why previous candle is not valid. Previous candle isn't valid because the next day we wasn't triggered into the trade. If the order was here, we didn't get triggered in, we closed, and then we closed the order off because it's invalid. That's how I trade it anyway. Close it off after 1 day. Okay, good. Right, so 1 to 1. So this would be a 1% trade. 1% trade. Cool? Don't worry, you can watch the recordings of this as well. So once we're out of this trade, where's the next trade? Is this next candle a signal? Is this next candle a signal? Yes, yes, yes it is. We're in the lower 50%. And the open or the close is in the lower third. The open in this case is in the lower third. Make sense? Is this valid for all pairs? I don't know. I've showed you at the beginning all the pairs that I've tested it on and traded it on. I'm still going to say that you need to go and test this yourself. Because as I said at the beginning, if you're asking me for an investment idea or a trading idea, you're still not going to trust it until you've done it yourself. You will not have the right mindset. Even if I just tell you the pairs, I was even going to hold that slide out, but I've just got to hope that you go and test it. What about 4-hour charts? It's the hourly. It's the daily. Sorry, it's only the daily. This is where people try and break it, try and tweak it, This is the daily. Okay. Now, is this an entry signal? Yes, it is. Stop order would go below the low, 1 pip. Stop loss, 1 pip above the high. We're going for a 1 to 1, which would be down here somewhere. Okay. You get triggered in and you eventually hit targets. Now, there is another one here if you miss this one, but likeliness is you'd be in that trade. So we're going to be conservative. We're going to add another 1% here. Okay. So what I'm going to do, just to be really, really conservative, is I'm going to ignore this one. And I'm going to say we was already in the trade. Now, you could have 2 orders. Yep, you could have 2 orders. But I'm going to just be ultra conservative here. Okay. Now, as we push down, is this one here valid? Why isn't it valid? You tell me. There's potentially 2 reasons it might not be valid. One, the most obvious is it hasn't touched the 8 EMA. And the second least obvious is the lower 50%. Now, you'd have to measure this out. As long as this is in the 50%, it'd be okay, but it's touch and go there. Okay, so we're going to ignore that one. We come back, and bearing in mind, guys, right, this is every day. So you come to the charts and you go, no, and you go away from the charts. So can you see how it takes me 10 to 15 minutes? It's like, no, 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 yes, no, no, yes. That's it. That's my trading done for another day. Right? So the next one, no. The next one, no. This looks like a setup, but what doesn't this do? What doesn't this one do? No touch the 8. No, no. What about this one? Yes. Now, this one is we place an order. Now, we don't know. I can't go down on a lower time frame to see how this played out. Right? If it violated our stop position first, we'd close the order off. But if we got triggered into it, then we pushed up, we'd be stopped out. Let's be ultra conservative and say that we lost. Because I want to give you, I want to give you low expectations, if anything. All right. Now, is this one another signal? This one here? Yes. Right. This time we place the order and we don't get triggered, and then the next day we close it off. So we're not in that trade. All right. Now this one isn't valid. I actually measured this one out. It doesn't. It's not the low of 50. Okay. And then basically we don't get another signal candle until all the way we get one here. Okay. So we get one here. We get one here. It touches the 8 EMA. We put our order in. We put our stop loss in. And again, depending on how the market played out, we roll down. We're going for a 1-to-1. Okay, depending on how this played out, depends whether or not you actually got a profit or not. I'm just rolling through this with you to go through the rules. Okay, so what we won't do, we won't include that one. We'll push back up. We push back up. We hit the 8 EMA right here. We put a sell stop order in and 1 pip above the high. We're going for a 1-to-1, which is about down here. This one hits targets 1%. Okay. We then push down. We carry on up. Is this one valid right here? Yep. Do we get triggered? No. So this is invalid. We then get another one right here. Okay. Is this one valid? Yes. Sell stop order goes in. Stop above the high. 1-to-1 reward to risk. Boom. 1%. Okay. Next one. Is this one valid? Yes. Stop order goes in. Stop loss order goes in. 1-to-1. 1%. Okay, then we don't touch the EMA until about here. This one isn't a 50%. Push down. This one wasn't a 50% either, even though that was a winner. So you might get tempted to do that. That wasn't a 50. I measured that earlier. Okay, so if it was on your data, then you got another winner. But let's just say this was it. Okay, 1, 2, 3, 4, 5%, minus 1. That's 4%. Who's arguing with that? That's one pair, one market. The bank will give you 1.5% in an entire year. This is a 2.5 month period on one market. And all those opportunities. Okay. And just before we take a quick break, just to go over that again, so the sell stop order, once the signal is created, sell stop order is 1 pip above below the low of the signal. The buy stop is 1 pip above the high. And then the sell buy limit, god damn, buy limit order will be 1-to-1. All right. So what we'll do is we'll take a quick break, get some coffee, get some water, and I'm going to come straight back in and we're going to have a look in the live markets as well. Okay, going to go through the rules of this into your plan. All right, so you've got it in the plan and you can take a screenshot of actually written out all the rules. Okay, and then we can go and take a look live in some other markets. We'll go, I don't know, we'll pick a couple, whatever's on the list. Dollar, yen, euro, pound. We'll go dollar, yen, euro, pound, and I'll just scroll back and check some pairs. Okay, so does everyone get value from that? Is everyone loving that? Right? Everyone understand it? We don't want you to share this with too many people, by the way. This is all about developing an edge This what goes on inside the trading edge stays in the trading edge. Okay, people don't give away this kind of stuff. It's just not heard of. All right, so going to take a quick break. We'll put 10 minutes because we've got we have 10 minutes. Yeah, we'll have 10-minute break. We'll have a 10-minute break, then I'll come back and we'll finish up on some examples. Okay, guys? So I'll see you at, whatever the time is now, 35 minutes past. I'll see you in a minute.